Hyliion is an investment disaster. That's right, ladies and gentlemen. Welcome back to Strongman Personal Finance. In this video, we're going to go over the financial statements of Hyliion. Huffing Hyliion. Oh, huffing farts and Hyliion. It makes me feel so high and lightheaded. Hyliion. So, what is Hyliion? Well, I don't really know much about it. Don't really care because the financials are that bad, as we'll see in a second. But, as you can see on their website, their mission is to be the leading provider of electrified powertrain solutions for the commercial transportation energy. So they're all about saving the world and, I guess they're providing powertrains for trucks to make them more, liberal and amazing and less destructive to the environment. Okay, I don't hate that, right? Well, we're going to go look at their financial statements because this company is an absolute investment disaster. Now, one thing I want to teach you is when you go look at a stock that loses money, I always want you to go do Control F and type in going concern, and search through it because you want to see if there's an auditor's report or if the company itself is telling you that there is substantial doubt about the company's ability to continue as a going concern. Going concern is an accounting assumption that a business is going to last forever. If a business is potentially going to go bankrupt, they may have a note in there about doubt about continuing as a going concern. That's the first thing you really want to look at before you look at anything else, all right? So what does it say here? The financial statements have been prepared on a going concern basis, so the financials are assuming the company is still going to be in operations for the foreseeable future. The company is an early-stage growth company and has generated negative cash flows from operating activities since inception. At September 30th, 2022, the company had total equity of $451 million. Okay, so I guess they're saying they're not going bankrupt anytime soon, but we're going to go look at the financial statements. So the first thing I want to look at is the balance sheet. Okay, we're going to look at current assets, and we're going to compare it from December 31st, 2021 to September 30th, 2022. This is the most recent report, at least what I could find, okay? What happened? Well, cash and cash equivalents went down very massively. Almost $100 million of cash disappeared. We'll see where it went. Okay, accounts receivable went up pretty significantly. It could be either from sales or because they're having a hard time collecting receivables. Inventory went up a little bit. Okay, nothing crazy. Prepaid expenses went down, probably because they were expensed. And short-term investments went up pretty significantly. So it looks like, assuming all things are equal, we'll see if they're not burning cash hand over fist, which I know they are. Basically, a lot of their cash went into short-term investments. Maybe. We'll see. So total current assets that are liquid, pretty much everything here is liquid, okay? Assuming these short-term investments are like treasuries or something, they could probably easily sell these and pay their short-term debts. Let's look at their current liabilities. $16 million. Okay, I don't see an issue with this company going bankrupt in the next year. Just looking at that, they have a ton of cash and cash equivalents, stuff they can convert to cash very quickly, and they can use that to pay off their short-term debts. Now, let's compare long-term assets to long-term liabilities. Okay, they bought some property, plant, and equipment. They, amortized some leases. Intangible assets went down, probably amortization. Other assets went up, don't know what that is. And long-term investments went down. That's interesting. Long-term investments has gone down by $120 million. The question is, why? Did they sell them? Or are those long-term investments other companies they have acquired that have been written down? I'm not sure, okay? But overall, their total long-term assets are we'll just call it 80 million, whatever. And then we compare that to long-term liabilities. They really don't have many long-term liabilities, okay? They maybe have $9 million of long-term liabilities. So overall, from a balance sheet perspective, they're pretty well capitalized. They have a ton of cash. They have a ton of short-term investments. They have a lot of assets and not many liabilities. So when it comes from a debt perspective, this company's sitting pretty well, right? Can't really fault them that much. However, let's look at their let's look at their equity section. So we can see additional paid-in capital went up. They issued shares, okay? And they've issued a total of roughly 6 million shares in the last 9 months. So they've been issuing shares, and their retained earnings has gone down by a very significant amount, from 179 million to 55 million. So in the space of 9 months, I mean, they've had a massive loss on their income statement. Unless they're paying dividends, or constructively retiring shares, which I highly doubt. So overall, balance sheet doesn't seem awful, but that's not telling the full story, okay? Let's go look at their profit and loss. So, for the 3 months ended September 30th, 2022, they generated $500,000 in revenue. And that's on the top line. $500,000 in revenue. For 9 months, they generated $1 million in revenue. What was their gross profit? Oh, they have a gross loss, probably because they have so much factory overhead, and they're probably not producing that much stuff, that on their top of the income statement, the first profit margin you calculate is negative. They had a gross loss of negative $2.4 million in 3 months and $6.1 million in 9 months. Everything they sell, they're not even making money off of that, probably because of the overhead. Okay? We can see their research and development has also massively exploded. And we've seen their selling general administrative hasn't really gone up nearly as much. Pretty significantly, maybe about 25%. But their SG&A is probably tripled, okay? Or research and development is probably tripled. Who knows what they're researching, okay? Their loss from operations. So in 3 months, they lost $65 million from operations on the accrual basis of accounting. In 9 months, they lost $126 million. I don't even want to calculate how bad that profit margin is. Okay, it's got to be like negative 10,000%. I don't even know. It's bad. It's bad. Okay, and I remember looking at this company a long time ago, and I was like, okay, they don't even have revenue. I'm sure they'll have revenue next year. They only had $500,000 in revenue in 3 months, in the most recent 3 months. Like, how are they not generating? What are they doing? I guess nobody's buying this garbage. Okay. So overall, the income statement is just absolutely awful. Like, it's just bad, okay? And we can see, of course, their share issuance. Let's go look at the statement of cash flows. All right, this is where it gets nasty. So, net loss, this is for 9 months. So over 9 months, they lost $123 million on the income statement, and they burned $83 million of cash. $83 million of cash went bye-bye in approximately 9 months, okay? Their stock-based compensation expense is $5.2 million. They have more, their stock-based compensation expense is higher than their freaking, revenue. Inventory write-down, that's interesting. So apparently they're writing down the value of their inventory. I guess it's not as worth as much as they thought it was. Maybe they're having trouble selling. I don't know. There's all sorts of madness going on here. But at the end of the day, they burned $83 million in cash. $83 million in cash in 9 months. All right? Let's look at investing. They bought a little bit of property, plant, and equipment. They sold a very tiny amount. They purchased in-process research and development. Okay, I guess they're buying, I don't know, intangible assets for butt-sniffing research. They purchased a bunch of investments, and then they sold or had maturities for a bunch of investments. So net, they spent $20 million on investing. So $83 million operating, $20 million investing, okay? And they basically didn't do anything for financing. So you may look at this and say, well, see, they didn't really dilute. I mean, they had some stock options exercised, and, I guess they paid some tax related to net settlement of equity awards. It's not that bad, right? Wrong. They are going to dilute 100%. There's going to be either a massive debt issuance, there's going to be some kind of massive dilution event, because they are burning roughly $10 million of cash a month. So if we go up here, and if you count property capital expenditures, they're burning more. So let's see. If they're burning, let's say, roughly $10 million a month. Okay. They could make it last a while. They really could. But at the end of the day, it's going to burn through quick. So there may not be an imminent dilution event coming, but this war chest of cash and short-term investments, and even these long-term investments, whatever they are, they're going to be burning through that. Okay. So I guess in the past they raised so much money that it's just able to sustain them for a long time. But it's not looking good, okay? $83 million burned in 9 months. That's pretty freaking crazy, okay? But they do have a war chest balance sheet. I mean, I guess they're not going to go bankrupt. They might even be able to last for a couple of years, assuming their burn rate stays the same, but that doesn't mean you're going to get any kind of return because they're not even producing barely any revenue, okay? It's ridiculous. So overall, this company's hot garbage, okay? They're not going bankrupt within a year. I'm pretty confident of that. Do your own research. But they're an absolute investment disaster everywhere else. And at some point, once that war chest of cash gets obliterated, they're going to have to dilute. So that's my thoughts on Hyliion. No improvement. I don't know. I mean, maybe this will work out. I guess they have partnerships here. Okay. But I wouldn't get too excited. Cheers!